Ethereum's $8 billion time bomb. Massive short squeeze ahead. Bitcoin has crashed and bounced countless times over the last 10 years. But here's the strange part. This September, even after passing the so-called weakest week in Bitcoin history, the price only dropped 3%. That is lower than the average decline. Statistically, it is holding up well. Psychologically, it feels strange. Because when the market is quiet, it means someone isn't moving. And when they aren't moving, it usually means they are storing up strength. Right now, leverage is tied to the extreme. And the whales, they haven't made a single move. So, what does that mean? It means the real move hasn't even started yet. Here's what matters. A lot of people are saying this dip is over, but the pros don't just ask, is this the bottom? They ask, has the direction actually changed? And right now, the direction hasn't changed. Why? Because we haven't seen a real crash or real rebound. This isn't a correction. It is closer to a frozen screen. And in these frozen zones, the same pattern always repeats. Retail investors drop their guard, wealth quietly accumulates, leverage piles up, the news stays silent. And then, suddenly, the market picks a direction and explodes. Whether it is up or down, you need to be prepared before that moment comes. So, today, let us break down why a market without corrections can actually be more dangerous. Do you know what is scarier than a market crash? A market with no crash at all. Because when prices don't fall, people tend to get complacent. They start thinking, maybe we've hit bottom, or maybe we're going up. But that's the trap. The market always moves against fear and greed. The worst crashes always hit when everyone feels safe. A market without corrections always builds into a bigger one later. Why? Because all that time, leverage keeps piling up. Right now, Bitcoin's market is quiet, but positions are opening everywhere. Everyone is thinking, it's fine now. But the whales completely silent. The news is quiet. Influencers are quiet. Even the price is quiet. This, ladies and gentlemen, is the market catching its breath. The calm before the storm. And if you look back at past cycles, the biggest crashes always started in times like this. By the time people are saying, I don't know why it suddenly fell, the damage is already done. Don't get fooled by the calm surface. Behind this silence, an explosion is loading. Up or down, it doesn't matter. Most people won't react in time. And why? Because they have gotten comfortable with a market that recovers without corrections. So, what's the plan right now? Simple. Don't try to predict direction, prepare for the blasts. In this game, most people make profits but still end up losing money. Why? Simple. They don't take profits. Especially in bull runs, everyone waits for the top. Just a little more, this time it will hit the real peak, blah blah. But the market never waits for them. Tops are only clear after they've already passed. Smart money doesn't sell at the top, they sell gradually, locking profits on the way up. This is called DCA-Out, or the strategy of selling in parts. And the key here? Controlling greed. Don't aim to take everything in one shot. Sell slowly, piece by piece. This way, even if the market flips, you've already secured some profits, and you don't lose your head. But if you hold everything and the market suddenly crashes, you panic. You stop thinking rationally. The market may look calm now, but when it moves, it will move fast. And in that run, the winners will be the ones who sold, not those who waited. Because the market doesn't reward waiting, it rewards preparation. Right now, there is a ticking time bomb hidden in Ethereum. Over $7 billion worth of short positions are sitting in the markets. And here's the kicker, most of them are high leverage, 10 times, 20 times, even 50 times. And the fate of these positions? Always the same. If Ethereum goes up, they get wiped out. And ETH is slowly creeping towards its all-time high. The moment ETH breaks that level, this mountain of shorts doesn't just crack, it explodes. One liquidation triggers another, sellers get forced out, and every exit flips into buy pressure. That's what we call a short squeeze. And it is not just a technical bounce, it is forced buying from desperate positions. The market often moves this way, not by chart patterns, but by position structures. And here is what makes it bigger, the platforms behind it. Swift, for example, is now testing stablecoin payments on Linea, Ethereum's network. Institutions are quietly expanding Ethereum-based infrastructure, and shorts are becoming riskier. So, no, Ethereum isn't dead. In fact, this silence could be the fuel for the next big run, because in the end, it all comes down to who you are listening to. For instance, do you make your investment decisions by watching CNBC? If so, you might want to stop right now. Take Jim Cramer for example. He once said Lehman Brothers and Bear Stearns will never collapse. It's a 100-year-old company, don't worry, hold. And then, they went bankrupt within days. Since then, he's made countless wrong calls. And now he says Bitcoin is dangerous. But here's the funny part. The more he bashes Bitcoin, the more the market moves the other way. The community even jokes. The opposite of Jim Cramer is the real answer. But this isn't just a joke. It's proof of how important choosing your information is. Depending on who you listen to, you could lose everything or make 10 times returns. The more chaotic the markets, the bigger the leverage of information becomes. And here's the truth. The most valuable info won't come from mainstream media. Real money-making info is hidden in small communities like YouTube or on-chain data. So stop blindly trusting experts. Titles do not matter, results do. And if you're going to follow anyone, follow the ones who actually hold positions, not the ones just sitting behind a desk. Recently, warning signs popped up in the US bond markets. At the 7-year bond auction, foreign demand collapsed. And what does that mean? The US wants to sell bonds to raise money, but foreign investors are saying no thanks. This is a massive red flag, because the US is already running constant deficits. If foreigners don't buy, who will? The US will have to hike rates just to move bonds, and higher rates directly hurt the dollar's value. When rates rise, asset markets shake. But, ironically, this could be bullish for Bitcoin. Because the weaker the trust in the dollar system, the more people seek decentralized assets. In fact, many countries are already testing digital currencies. The US is preparing for CBDCs too. And, along with it, concepts like UBI, Universal Basic Income, could be distributed in digital stablecoins. Money keeps printing. People get paid without working, and the value of that money keeps dropping. All of this fuels inflation. And in the end, more capital flows into assets with a hard cap like Bitcoin. It may look like just a bond problem now, but in the big picture, this is a signal. We are moving into the digital asset era. If you watched this video to the end, congratulations! You're already ahead of 90% of the markets. Most people panic sell in bear markets and chase hype in bull runs. But you're here, seeking information during the quiet times. That's not just watching a video, that's preparation. So, what matters now is simple. What will you do next? Remember 3 things. First, plan your profit-taking strategy. Don't aim to sell at all the top. Sell gradually as it climbs. Second, look at position structures before market moves. Study liquidations, leverage, and sentiment before charts. Third, choose your sources carefully. Don't just ask who's speaking, ask why they are saying it. Advice from someone without skin in the game has no weight. The market has no clear directions yet, and that means opportunity. Once direction is set, it's already too late. Those who prepare during the quiet, uncertain times are the ones who take profits when the market moves. Thank you for today. If you found this video helpful, please like and subscribe so we can meet again in the next one. This is the era where your judgment turns into profits. The real game starts now.